We are jumping back into technical analysis. This is technical analysis part two. So if you missed part one, make sure you go back and watch that so you can keep up with the classes. Everything is on the YouTube channel to make sure you subscribe and follow along, okay? Dropping gems for you to be able to understand the basics of the stock market and how to invest and how to manage your investments on a basic level, okay? So let's keep it moving. Those are my stock alerts going on. So, some common technical indicators. Like I said, this is a continuation of a part one. Some common technical indicators are the moving average. The moving average is going to tell you the most recent moving average based on a certain time frame for a stock. So that could be the last 50 days, it could be the last 200 days, and 20 days. It's typically either the 20, 50, or 200-day moving average that people are looking at when they're looking at technical analysis on a stock. Okay, so you have two different type of moving averages. You have the simple moving average and you have the exponential moving average. The simple moving average is the average of the closing price over a set number of periods, like I just said, and the exponential moving average is weighted towards more recent prices. So they're used to identify simple moving average that identifies trend direction, and the exponential moving average reacts faster to price movement. Okay, so that's more dynamic, and if you're a live trader, that may be the moving average you like to use more often. So some of the common periods, like I said, you have 10-day, you have 50-day, you have 200-day. I like 20-day, but 10-day is used as well, so that's really short term. So that's usually within a week's time. Is telling you what that stock's average price has been over the last 10 days. 50-day moving average is going to tell you what the average stock price has been over the last 50 days. And the 200-day is going to tell you, obviously, what the stock price has been over the last 200 days. So each one is going to give you a different strength of level. So the 200-day moving average is going to be the strongest moving average on the stock. And that's because it's giving you the average price over the last 200 days. So that's usually the moving average that people use as the base guideline for if the stock is performing well or not performing well. If it's performing above this 200-day moving average, it's usually on track and doing well and continuing to grow. If it's performing below the 200-day moving average, that usually means there's a decline in growth in the company and something is going on. All right? And you're going to get these indicators. You could get these time frame indicators on different time frames, but this is using the daily time frame. So everybody that's on TradingView, this is using the daily time frame, and you could put on that moving average indicator, and it'll show you those different time frame moving averages. All right, let me give you a little example right here. So we have the moving averages. I have the moving average indicator on right here, and you see it's going to show you, as I take it away, these three lines disappear. So you have this blue line. This is the 10-day moving average. This yellow line will be the 50-day, and this red line right here that you're seeing is going to be considered the 200-day moving average. Okay, so you want to make sure that a stock usually holds above this 200-day moving average if you're investing long term. So that is called the moving average on TradingView for all my TradingView users. When you open it up, you could set it to be, like we said, standard moving average or exponential moving average, whichever you prefer to use based on your trading and investing style. For you beginners who are just starting off, just use the SMA to keep it simple for now until you get more experienced in your trading, okay? But you can set the time frames on here. Like I said, I usually like to set 20, but you have 10, 50, and 200 as the standard most of the time because that is what majority of people are using when they're looking at those moving averages. Okay, let's go ahead back to the slides. No. All right, relative strength index, the RSI, the relative strength index is going to show you what the price momentum is looking like. Is it upward momentum? Is it oversold or is it overbought? Okay, so if it's overbought, you're going to see a RSI value start going over the 70 level. So RSI is another indicator you want to make sure you're putting on your TradingView. These are going to be your momentum trackers. I have a specific way that I like to track momentum on stocks, and it uses all these indicators that I'm teaching you today. So these are the basics, but the basics are usually what carry you through all the way as you grow and become more successful, as you stick and stay consistent with the basics. In the RSI, the formula that's on here, you'll see the RSI equals 100 minus 100 divided by 1 plus RS, relative strength. These are formulas that you don't have to really lock in and know unless you're out here trying to calculate the RSI on your own independently. Majority of apps and platforms you use are going to be calculating the RSI for you, okay? So just put the indicator on, and the main thing you need to pay attention to is the value. Is the RSI over 70 or is it below 30? If it's below 30, that usually signals that the stock is starting to become oversold, and that is usually a time when you get a reversal back to the upside in the stock. So people look on a daily time frame and they'll say, oh wow, the RSI on this company's dropped below 30. It's due for a bounce soon. Now you can never time the bounce exactly, but these indicators help you understand where a company may currently be at the time. And you want to look for confluence, something we're going to talk about later. That's when you stack multiple technical indicators and their signals together to give you a stronger signal, stronger confidence behind the stock move coming. MACD. MACD is one of my favorites. MACD is the moving average convergence divergence. The MACD is going to tell you two things. You have the MACD line and you have the signal line when you're looking at the MACD. And then you have the little candlesticks that are going to show you engaging the momentum, whether it's increasing or decreasing into selling pressure or increasing into more buyers coming in the market. All right, so the signal line is going to be a more steady line, and the MACD line is going to be the line you see moving up and down more often. And you want to look for that MACD line to cross down or cross back up above that signal line. When it crosses down, it's going to show you that it's a bearish signal. When it crosses up above the signal line, is a bullish signal. Okay, so that is the main difference between those two lines that you want to pay attention to, and they are gauging the momentum behind the stock between different time periods. So the MACD line is gauging the 12-day EMA and the 26-day EMA, while the signal line is looking at the 9-day EMA of the MACD line. So they're using different formulas, which is why the signal line is considered the line that is the more steady of the two in the indicator. And when that line is crossed either up or down by that MACD line, that is the signal where you want to either buy puts and calls or sell your puts and calls. So like I said, the use case, if it goes above, you have a positive bullish momentum coming in the market, and if it goes below, you have bearish. Let me show you the MACD right now so you have an idea of how that looks. Let me pull that up. So you have a MACD indicator right here. So this is the MACD. So the MACD on a particular stock will show you when there's bullish momentum coming in or bearish momentum. And you could correlate that to the stock price movement as well. This is crypto.com coin, one of my favorite little altcoins for people out there in the crypto industry. But you have the signal line will be this orange line, and the MACD line is that blue line you see waving up and down a lot more frequently. When that blue line is crossing either above or below that orange line, is giving you a bullish or bearish indicator of buy or sell. So when you have a cross to the upside like we have right here on the MACD, you're going to say, oh, that was a bullish sign. That shows that there's buying momentum coming into the market or coming in on this stock particular. And when it crosses back to the downside like it did right here, you say, oh man, that's bearish momentum coming in. There may be some selling to come. Now, there's no one indicator that's going to give you the tell-all for what's about to happen with a stock. But these compounded on top of each other are going to help you have a better idea of what's to come in the stock's price movement. So like I said, you want to use this with price levels and trend lines like we talked about in part 1 of technical analysis. You want to use those together for confirmation. Next thing we're going to talk about is volume. Volume is very important. Volume tells you whether a move is legitimate or is trying to be a fake out or not. When you have large volume coming into the stock market, it usually signals institutional buyers are here. Those are the billionaires coming in with their money ready to make a move on a particular company or ETF. That lets you know when they're making a move, either buying or selling, that there is some kind of indication on that stock or company that something is happening. Whether that be bullish or bearish, it really doesn't matter. But the volume behind the move is letting you know that it's a legitimate move. If there's no volume and you see a big rapid move on a stock, then that's usually a fake out that's trying to catch people either being too aggressive in their buying or too aggressive in their selling. You could see volume. You have something called on balance volume. That's another indicator. I don't really use this one too much. A lot of the times you'll be good with just the volume indicator. I use an indicator called up down volume on TradingView. So if you want to put that in, it's called the up down volume indicator. Find that on TradingView, plug that in. It's going to show you the buying and selling on any particular candlestick and the difference between the two. When you see more than average buying, you can see the average volume on a stock per day, how much it trades in volume on average. When you have a breakout above that average trading volume, that usually means the move is stronger and validated by, stronger and validated by the institutional investors that are in the market. When it's low volume, it usually means that there's a fake out that we're experiencing. Okay. So like I said, it'll be suspect or false if you have low volume on a big candlestick move. And you could get that often. Sometimes you'll get a rapid candlestick move and it'll surprise you. And you'll be like, wow, why is the market pulling back like this? And then you go and analyze and you'll see, oh man, the MACD crossed down and all these bad things look like they're happening. And then you'll go and look at the volume and you'll see, oh, wow, this is much less volume than we average, that we trade normally on this company like a Tesla or a Microsoft or Google. Why is the volume so low? Why did it cause such a drastic move? Because low volume movement, when you don't have a lot of buyers coming in the market or a lot of sellers in a certain direction, it could create a drastic move in a stock just because volume is low in the market in general at that time. So that particular amount of buyers or sellers come in and they influence the market and they create a big shift. Now when the volume picks back up to its average, as I was going to show you right here, you can look when you open up TradingView and you look on the side, you'll see in the key statistics, one of the things they tell you is the average volume over the last 30 days. So every day you could come in and look at the volume and say, okay, are we trading below that average volume or above it? If we're trading way above the average volume from the last 30 days, that lets you know institutional buyers have entered the market in a heavy way. And then you got to say, is that volume supporting buying action or selling action in the market? So if that volume creeps up and it gets above the average volume and it's a downturn in the market, then you could say that downturn is probably legitimate because institutional buying is supporting it. Or if it's a upturn in the market, then you could say, wow, that is a legitimate upturn because we have so much volume behind this buying. So if you look right here in the top left, you'll see volume and you'll see how much it says. You see 30.63 million right there. So if I go over each different day, you'll see that number change. It was 40 million on the July 23rd. We had 40 million volume on the Qs, and the average volume is 43 million. So that's just a little bit less than average, but it's nothing to say, oh my God, it's so much, it's so little selling that whatever move happened this day is invalid. It's pretty on par with the average move. And then we look at the next day, 42 million, and then this next day, 30 million. So this one may make me raise my eyebrow a little bit because it's 30 million, which is a pretty sharp downtick from 43 million average. And we had a push up today. So you could say, is this a valid or invalid push up that we just got in the market on Friday? You don't know, but the volume is telling you that you may want to be careful with this upward momentum that it may be dying out because volume is going down. So volume is very, very important to help you learn and understand if a move is legitimate or not. And it's going to help you determine your entry or exit on certain companies. All right, so we got entry signal confluence, which is what I'm talking about now, is seeing multiple indicators that we just talked about, like the moving average, and combining that with the volume and seeing that with the trend lines that we talked about in part one. If all these things are stacking up with each other and you see that they're all telling you the same thing, then there's a much higher chance that that move is coming in the market, whether that be to the upside or downside. So one of the signals, like I said, we were talking about trend lines before. You have a 50-day SMA moving average sloping up. If the trend line is sloping up and the stock is holding that support line and it's going up, all right, the trend is holding. Now you see momentum at the same time. If the momentum has an RSI going off of 30, at the same time it's holding the uptrend, and we're bouncing off that lower range of the RSI, and it's no longer being oversold, it's starting to become bought in a healthy way. All right, momentum is on your side. Then you have price action. Are you looking at the candlesticks? Do we have one of those engulfing candlesticks that we talked about in part one, where you have a candlestick either going up or down and the following candlestick engulfing it in the opposite direction, creating a reversal? And then, like I said, last but not least, you always want to check the volume to validate any of these moves, whether it be trend, momentum, or price action. Volume is the validator of moves. If there's no volume and you're getting all this stuff happening, it could be a fake out. So you always got to be careful if the volume's not there to support you. All right, so the assignment for this week, everybody, is going to be, I want you to find one indicator. We're going to do indicator practice. I want you to pick any stock and do the following indicators. I want you to add the 50 and 200-day SMA. Put that on your trading view. I want you to do the RSI. Make sure you add the RSI indicator on there. Make sure you add the MACD indicator on your trading view. If you are serious about investing and managing your own trades, you're probably going to have to pay for at least a basic version of TradingView so you could use multiple indicators and price levels and alerts to keep up with what's going on in the market and everything I'm giving to you as a community to help you become more successful on your weekly trades and long-term investments. Then I want you to analyze chart momentum. Is the stock that you're looking at in the uptrend or downtrend based on the indicators that we have on there? And then I want you to look at, is the RSI overbought, oversold, or neutral based on what I told you in this lesson? And then has the MACD crossed bullish or bearish recently on the daily chart? I want you to look at all this on the daily time frame and see what you see and give me some feedback, and I can help you, let you know if you did proper analysis or the analysis is inaccurate. Okay? Thank you all for coming. Make sure you follow and subscribe at Culture Shock Investments on every platform, TikTok, YouTube, and Discord. I'm going to make sure that I share this on TikTok. I don't know why TikTok has my videos down right now, but it's definitely up here on YouTube. And the Discord community is always going to have access to everything I produce. So if you want access to all the price levels and all the content I produce, subscribe to the Discord, become a Culture Shocker today, and thank you to everybody that came through. I will see you all next week for the next lesson. If you have to catch up, go back and watch the previous lessons. All right, y'all.